Welcome to another episode of our podcast. Today, I want to dive right into it, and we're going to discuss title and title insurance. I know this seems like a boring topic, but it is a very important topic that you all need to be aware of and what's going on. And I'm going to introduce Steve Kaempf here with Land Trust Title, who happens to be a fellow podcaster. I've been a guest on his show, so he probably felt forced to do my show.
It was my pleasure.
But aside from that, we've known each other for a number of years. Steve is a soccer player like I am. We're both struggling to still play through injuries, I think, now and again. But he's just brings so much knowledge to everything going on in title and with real estate. So, Steve, I'd love you to just do a quick introduction, and then we can dive into some topics here.
Great. Thank you, Brad. I'm so glad to be here. Yes, I do have a decent amount of experience in title insurance. In the late 90s and into the early 2000s, I had my own mortgage brokerage, residential lending primarily, and had my own affiliated title company with that, and built and grew the title operation to a fairly big size. And then if you haven't watched The Big Short and you want to know what happened, just to me during that period of time, you just watch it. And so I was, kind of crushed out of the business, but I left with a ton of experience. And then I was recruited by one of the largest privately owned real estate brokerages in Chicago, Baird & Warner, to really build out their title business, and started with their affiliated title business. And then I grew to our own independent brand, Land Trust Title Services, which serves Illinois, Wisconsin, and Florida, and multiple joint ventures, both with residential real estate brokerages and with local community banks. So, it's been a fun ride. It's been a great time, and, picked up a lot of experience along the way. And yes, in terms of soccer, we have our next real estate soccer roundup tomorrow, where we've been playing inter-squad games, but tomorrow we actually have an opponent that we can beat up on. And so, I've been in the hyperbolic chamber, cryotherapy, positive affirmations, whatever else it is, to make sure I'm in the right headspace to, really make an impact.
I always fear those competitive games anymore. We get too many people trying to relive their youth. I just want to go out there, kick a ball around, and just feel good about myself. I don't need to break a leg or an ankle or anything like that. But
Brad, you'll be happy to know that last year I was voted Title Insurance Player of the Year. And what I will share with you, I haven't shared with everyone, especially my wife, is that I was the only title insurance player there. And so so I won the Player of the Year. That's the story. You can edit the rest of the explanation out.
Gotcha. So dive into some topics here. So most people are like, title insurance, it's this wacky thing I got to pay for whenever I refinance a property or I'm buying a property. I don't think a lot of people understand exactly what it is and why it's of value to them. Would you mind just taking a moment, like very simply just educate, business owners, real estate investors, why should they actually care about their title insurance?
Yeah, that's a great question. So title insurance is one of these things that you never think about until someone pops out of the bushes and says, I want, I own this, I want this, some kind of trouble happens. Okay, and so let's just talk about that. When you're purchasing a property, from the seller's standpoint, when I'm selling my property, I need to make sure that I'm promising the buyer a clear title, that everything that I've done, whether I've built something on the property, whether I've borrowed against the property, whether I've quit claimed a buddy onto the property, whatever it is, all of those things, I need to ensure to the buyer that there's nothing that I've done in my past that's going to come out and haunt him, okay? Because the buyer wants to know, when I'm buying this property, it's not going to come with any kind of troubles or problems that I didn't create for myself. So that's the first thing, okay, is that really it's this idea of the buyer getting insight into what the seller has in terms of liens and clouds on title, which that's the title insurance examination, and then the commitment that's delivered at closing is the commitment says nothing's going to come out. We've taken care of it all. Every issue that's been raised and come up is taken care of. And if it isn't, oh, by the way, I have a title insurance company that says if they've missed something, if Uncle Harry pops out and says, hey, one night at a poker game you threw the quitclaim deed, and we signed it and we agreed, right? Doesn't matter. The title insurance company is going to pay the claim. Okay, so that's from a buyer and seller standpoint. But from a lender standpoint, if you're borrowing money to a buyer on the property, you want to know that you have a clean lien, you have the ability to get a clean lien on the property and not wind up being in second, third, or fourth position behind a bunch of parties that you didn't have insight to. That you want first position, or if you're a second position lien and you know it, you want second position, whatever it is. But it's all about making sure that your property that you're delivering is clear of any obligations, encumbrances, fraud, whatever it might be.
Perfect. And, everybody's like, okay, so you got to get title insurance when you do real estate, but that's not the only time a title insurance company is valuable, right? Because you guys are a fiduciary. So you guys get used to hold escrows, to fund construction draws. If you guys probably, I don't know if you guys do, but do you get involved in like business closings as well, escrowing money for
absolutely.
those as well?
Yeah, and that's a great point. The title insurance company is really the neutral party that makes sure that the seller does what they say they're going to do and the buyer does what they say they're going to do. And they make sure that all of that checks out at the table. And the title insurance company represents both of the attorney, in a way represents, make sure that the attorney on the seller side, that the seller, the attorney, and every piece of the seller's obligations is cleared. And then they also make sure that the funds are there, that all of these obligations, that they're good, that the person's not a drug dealer and buying the property, or whatever, and that the loan is good, and that the wires are received, and so it protects the seller to make sure they get what they thought they're going to get, and it protects the title insurance company is there during the closing. And I know sometimes closings are remote and all that, but they need to make sure that all the boxes are checked so that the buyer or the seller are not left holding the bag, and so that's a really important aspect to it.
Gotcha. So in today's market, every attorney has a title company they're working for. In fact, a bunch of attorneys own their own title companies. In the old days, I felt like, it was Chicago Title and a couple other major players, Fidelity, but now there's all these other title companies. What should people be looking for? Should they just, and I don't mean to upset any of the attorneys I work with, but should they just listen to their attorney and work with their attorney's title company? I mean, what should they be thinking about? And should they have a say? Should buyers and sellers have a say in who they have representing them for title?
That's a great question, Brad. Here's my opinion on it, and there's a bunch of different probably viewpoints on it. So first off, title insurance, generally speaking, the cost of title insurance is, I would look at it as it's almost fixed in the sense of the rate cards for Chicago Title, First American, Land Trust, Stewart Title, Old Republic, they are all within 5% of each other. Okay, so generally speaking, like to run around and shop for title insurance as a consumer, to me, is a waste of time. Okay, it's just a no-go because generally speaking, if you're using a popular name brand title company in your local market, that has done closings, that kind of thing is usually vetted out by the professionals along the way. So for instance, Brad, if you're a lender and you're in a position to order title and you see title come in and it's like, wait a second, this isn't out of scope. There are general costs for title, a cost per thousand on the owner and the lender's premium, closing fees for endorsements. They're very, very close. In fact, most title companies sit down with all the rate cards and they basically redraft their rate cards based on the big boys, the big underwriters. So that's the first thing, is that title insurance charges are, I don't know if you have a question on that.
Well, no, I was going to say in some states the title insurance charges are fixed by the state. So
Yeah, like Iowa's exactly is a state like that, for instance, and I'm sure there's others. Another consideration is I would spend more time vetting your professional partners and trusting them for their resources, because we're really a partner to your main partner. We're a vendor to you, the lender. We're a vendor to the attorney. And so if you get a well referred attorney partner, a well referred lender partner, you can trust them for their title insurance choice. Now, in the instance that you're working for a real estate brokerage and your real estate brokerage offers ancillary title services, it's my opinion that you want to keep that in-house and in brand, because it's just better rather than making someone else stronger. In that case, as a broker, now I'm not talking about sellers. I would trust my real estate, I would trust my attorney, and I would trust my lender. So
okay, and as it relates to that, then I don't want to say you gave away the golden sauce, saying all your pricing is roughly the same between your competitors. What sets Land Trust apart then? What do you think really gets the repeat business and the partners? I mean, banks don't partner with everybody on titles, so
yeah, that's a great So here's what I would say. I'm not going to say it exactly right, but in absence of value, you're going to wind up dickering about price, right? And so where Land Trust tries to differentiate themselves is in really, and I know everyone talks about it, but we talk about the customer experience. We invest a lot of our time, energy, and resources on elevating the experience for the consumer, and that is, and for our partners. And so what I would like to, we have a footprint that's a little bigger in Chicagoland than, let's say, Old Republic and Stewart Title in terms of the residential space. But, Chicago Title probably does 5, 8 times, 10 times maybe the business that we do. And so we would like to say that Land Trust has big underwriter expertise and kind of a boutique agency service offering. And that is unique because most small agencies in Chicagoland, the owner is the examiner, is the closer, and there's just they don't have a lot of the ability to scale to be able to close within Chicago and the Collier counties. They might have 1 or 2 office locations and that kind of thing. So we have 15 locations, commercial, residential, strong examining, and just great underwriter partners. So for instance, we're ranked 10th. Land Trust is ranked 10th in fidelity in the Midwest and South for proficiency, risk management, and volume. And so, we are really recognized amongst our great underwriter partners. So that's how we do it. And we and working with great partners like you, we really are intentional about partnering, in a networking kind of way that is real and is meaningful. So there's one thing to be able to do the deal, and which I would say every title company eventually gets the deal done, but it's another thing to actually look at the attorneys and the lenders and the real estate brokers that are working with us and say, how can we, with our expertise, knowledge, resources, how can we partner with them to grow their business? Because if they grow, we grow.
Nope, that makes a lot of sense. Excellent. I can say personally, and again, I'm going to make a little bit of plug for you guys, but I can say personally, when I sold my home, we used a Baird and Warder realtor, and it ended up going through Land Trust Title. And then we had a purchase down here in Florida, and you guys were super kind to, in essence, handle the buy side of our purchase in Florida at time of closing, because we couldn't get down in Florida same day or within the 48 hours we had to, especially with my son. I think the folks here may not know, but my son broke his leg right before we moved, so it was kind of a mess. But Land Trust was very helpful, so I really appreciate that. Everybody keeps talking what's going on in real estate today. You guys are at the forefront, right? Because you see what's going on in closings, both residentially and commercially. Have you seen the big slowdown, and what are you hearing from your realtors? We're right in January, February time frame where the market starts to heat up a little bit for the spring market. Are there a lot of listings coming on? Are you getting word that you're going to have a busy spring, or is there some concern about it being a little bit slower?
Yeah, so I would say it's mixed, and I'd offer, I would say our volumes are right around 2019 volumes. So what we have to remember is when everyone thought the whole world was going to shut down, and it did, particularly if you're in Chicago in 2020. But really, we had one of the greatest record-breaking years of real estate it was one of the essential services, and kudos. I would put our closers right in the same camp as the first responders that showed up to work and did not miss a day of closings, and attorneys and lenders and everyone still sucking it up and doing it. And then 2021 followed a great year, and then the beginning of 2022 even we started to see a little bit of a slowdown towards the end of last year. Everyone put the brakes on things. And I was talking to someone, a guy who's a real market expert, and he's about what he thinks about this year in real estate. And he said, Steve, there are the 7 Ds he mentioned. And he said, and they're independent of employment and interest rates and economy. And he said, there's divorces, there's diplomas, there's diamonds, people getting married, right? There's descendants, people having kids. There's distress, which is, bad stuff happens to people. They got to sell their property. And there's death, which that creates an event. And I forgot what the other D is. I'll think of it at some point. But the point is, there are life events happening that it doesn't matter. People don't care about what the rates are and all that. They're like, I got to sell, and I'm going to go down as low as I can for a buyer. And so I think a mortgage person would look at this and say, hey, if you're looking at a $400,000 property today, in 2020 or 2021, that thing sold for $450 because it had multiple bids. It got bid up, big time. And so you had a lower interest rate, but you had to bring $50,000 more cash to the table. And now that $400,000 property might be listed at $380, and you might get it for $350. And so now you're getting it for $50,000 or $100,000 less. And now you figure that into the equation. So I think that there's always these, and we might right now be in a predicament where the sellers still haven't swallowed that their home is not worth $400 and going to get $450. But I think what we're seeing is that's happening. People are reading the tea leaves. They're swallowing the horse pill and saying, hey, it is what it is. I'm not selling in 2020. I'm selling in 2023. And I need to move and I need to get this done. And so I think you're going to see the market get unstuck. We're starting to see listings come on. We're starting to see agents get real busy. We're starting to see a pre-qual apps with mortgage people. And so I'm optimistic. And I think the good ones are going to be busy. I think the fringe players, Brad, might have a little bit of trouble. And what happens is when there's more fringe players than there are good ones, okay? And so when you talk to the fringe players at the water cooler while the ones are out there selling, you hear all those negative stories. Oh, I can't do it. I didn't have this. I didn't have that. But when you talk to that group of producers, they're like, I'm busy. I'm rocking. I'm this. I'm that. So I would, say those are the stories. I'm sure you got, the deals aren't as plentiful as they were, but I'm sure you got deals you're working on. There's investors doing stuff. And so, anyway, that's my take on it.
Yeah, so I would say it's kind of interesting on the commercial side. I still think that there's a lot of people trying to do stuff because business has been relatively healthy in 21 and 22. And even though there's some signs that we could have some bumps in the road and some recession, I don't think anybody's expecting us to just fall off the cliff. And interest rates are definitely higher, but compared to historical averages, and you got to be careful when you say historical averages, because if you look at the last 10 or 12 years and you factor that into your historical average, for people, it doesn't make sense, especially young entrepreneurs who have only known a low rate environment. But if you look long term, over my 25 years in banking, we're still at a relatively reasonable interest rate level for commercial deals. So I do agree with you. I think there's still going to be activity. The biggest thing I've probably seen in the commercial market, especially with investment properties, is owners still haven't adjusted to where interest rates have gone. Or I should say sellers haven't adjusted. And I always tell people, it's kind of like you got to look back 6 months, right? Any deal that closed in the last 1 to 3 months was probably put under contract 1 to 3 months before that. So they're all looking at comparable sales that go back a month ago that was really possibly values from 6 months ago. And they still think they should get that. And I think it's going to take 3 to 6 months from now when they see that other stuff's selling for less that they finally accept, yeah, if I really want to sell right now, I'm going to have to sell for less.
Yeah, it's when those new people come into the market at a different price that they realize, oh, I'm overpriced. And I just talked to a Florida broker on the other side, on the Gulf side, and he said that this was like the first week that they started to see these residential properties start to adjust their pricing. And he said he thinks he's going to see a big pricing adjustment along that coastline.
Yeah, so I would say late last year, we started to see it on the east coast of Florida. So I'm down in the Jacksonville, St. Augustine area right now. And some of the higher end homes, you started to see some pretty significant drops. Now, if you look at where they historically sold, the drops probably weren't that high. But if you look at where like the Zillow values and other stuff had some of these properties, it looks like they're starting to adjust down to realistic market now. Well, I did have one other quick question for you. Is there anything going on in the industry that borrowers should be aware of? Any major changes coming with title, or is it just kind of the status quo going into 2023?
Well, that's a great question. And Brad, you were, I think we were talking before, and you were asking about the difference between residential and commercial title, right?
Yes.
And I wanted to make a distinction between the two because in residential title, there's a lot of uniformity. During the refi boom, typically you pull title on a resident of a residential property, and you'll see a mortgage, and that maybe a mechanic's lien if it's really whatever, or maybe a little bit of a wonky owner. But I think on the commercial side, there's a much different ball game in terms of title. There's a much different level of expertise that's required for commercial title. It's not the same thing. Lenders typically, and this as a lender, you need more assurances, right? That there's certain things that aren't going to come up. Whether it be via, like for instance, on a residential title, you might have 3 endorsements, right? There's the EPA, there's the ARM, there's the PUD, maybe a variable rate endorsement. But then you look at commercial endorsements, and there's 15 different commercial endorsements. From all the way from utility to contiguity and on, access and entry. And so there are a bunch of different considerations when it comes to commercial title. And, so that's and that again speaks to that a lender that can help navigate those things and make sure that every buyer is protected so that when they purchase a property, they're not going to get, because it is a little bit Wild Westish, where all of a sudden you didn't look for that one thing and you wind up holding the bag, And so title insurance companies have to do a lot more due diligence to make sure that they're not, either they're going to ask for something to be cleared, or they're going to insure over something. And so that they need to make sure that these issues are that they do, if they're going to insure over it, that they have a good handle on that. So I just wanted to make that kind of distinction in terms of it.
Gotcha. So outside of the distinction between residential and commercial, any other changes happening in the industry, or is it status quo?
No, I would say, I think what you're going to see once lenders don't want a wet signature anymore on the residential side for sure, I think you're going to see more. I think you're going to see the dynamic of the closing table change, where it is not going. There's a lot of work done outside of the closing table. And you hate to have it defined down to that moment. And even 10 years ago, the seller and the seller's attorney used to be at the closing table, the garage doors, the keys, all that be at the table and everyone get it there. I can't remember the last time a seller showed up at the closing table anymore. Most of those documents are pre-signed. Most attorneys would say, I don't want to be at the closing table anymore. We've already agreed. Why open up that can of worms again? Just let the buyer go through that buyer's document, their mortgage documents. Let them fund the deal, and we're good. Our side is good. We've agreed. And so, too much discussion around the table after, it's like the meeting after the meeting. You don't need the meeting after the meeting. And so I think soon you're going to see, maybe soon might be 2 years, might be, a year, where you're going to see that there are less buyers at the closing table. And a lot of that's done in advance. But I think what's going to get that unstuck is the mortgage provider, the lenders, agreeing that they're on electronic notary and electronic signatures. And that's kind of getting stuck there.
Yeah, I will say that it's very interesting on the commercial side because I'm seeing on the residential side, you're absolutely right. A lot of stuff is getting done now with electronic signatures. But when it comes to loan documents, lenders are still very particular about wanting to have an actual signature. And part of the challenge with that is there's not really a legit way to notarize a document, right, electronically. And your mortgages still need to be notarized. Sometimes promissory notes, security agreements, personal guarantees need to be notarized. So until they can kind of find a way to work around that, I still think that if it's not at least a physical closing, there's still going to be somebody having to go somewhere to get documents signed in front of a notary and then turned in. But it has come a long way.
Yeah, and Brad, do you close when you're closing a deal for your borrowers? Are you or one of the representatives from Commercial Lending X signing those documents?
So we do some direct hard money lending. So when we do our direct hard money lending, though, truthfully, we typically don't have a representative at the closing. Our attorneys draft those documents and they send them to the closing in advance. And it's the borrower and the closing agent that handle the closing. And at this stage, we haven't had a client not close at a title company, with the exception of where they've signed in front of a notary somewhere else, or the title companies, I should say, has arranged a remote closing so that they've sent somebody out to sign the documents for them. I think that trend, at least for the immediate future on the buy side, if you have financing involved, is going to continue. I don't really see lenders comfortable moving away from having actual signatures and notarized signatures, but that could change at a future date. Most of the lending partners we have, though, I would say it's rare that the lenders even go to closing, or if they do, it's just the buyers and lenders and then the title agent there. It maybe some of the more complex commercial closings, if it also includes a business purchase, you'll see both parties there because they're still trying to work through last second issues. But outside of that, you're right. Almost everything's settled before closing. Well, Steve, I really appreciate you taking the time today. This has been awesome, super informative. If you don't mind, real quickly, can you just give how people can get a hold of you if they want to learn more, if they have questions? I know I'm putting you on the spot for all these calls about title insurance, but
no. Yeah, that's great. So my name is on on the screen, I hope, but it's steve.kaempf@mylandtrust.com. And you can also find us, if you want to listen to our podcast. We have a lot of interesting things. Brad was on as well. Our podcast is really centered around real estate professionals and really their entrepreneurial journey, their career journey. And so if you're a person that's like, wow, what does it take to make it? I try to get people that have made it and have them talk about their stories, and plus they're great, active experts. And that's the People Not Titles podcast. It's on Spotify, Anchor FM, and on YouTube as well.
Awesome. Well, Steve, thank you again for joining me today. I hope you have a great day, and good luck in your soccer game. So if you're in Chicago and a real estate professional and you want to play soccer with some other real estate professionals and the best title insurance company soccer player in possibly the world, contact Steve.
Yeah, could be in the world, actually. Might be. All right. Take care.
No problem. Thanks.